Guys, in this video, I'm going to show you my step-by-step copy-paste take profit strategy on how you can turn a $10,000 investment into $165,000 conservatively investing into stacks. So in this video, we're going to go through that take profit strategy. We're going to explain what stacks is. We're going to explain how they're lining up with the Bitcoin halving ETF and layer 2 narratives, 3 narratives at one time, and just talk about why we think this is a good investment. So before we get into it, I do have to say this video should not be taken as financial advice. Please consult with your financial advisor before making any investment decisions. This video is for your education purposes only, and like we always say, do your own research. So if you watched the video I released earlier this week on what we think the top 4 narratives will be coming into this bull market, definitely give that a watch. But in it, we talked about how we think layer 2s is going to be a huge narrative. Let's talk about why. Basically, the last bull market, you had people complaining about high gas fees because once the network activity went up on Ethereum, the gas fees went up, and then that's why people were using Solana and Binance Smart Chain and Cosmos and these other layer 1s with cheap fees. But what it boils down to is every blockchain has something that they're dealing with called the blockchain trilemma. You have scalability, aka transactions per second, security, and decentralization. Pick 2. Each blockchain is optimized for 2. You have to realize each blockchain is in the business of selling blocks. So if your blockchain isn't scalable, that means once people are bidding on blocks, it doesn't mean if you have a decentralized exchange or NFT project or borrowing and lending or some kind of yield farming protocol, all these transactions are competing to get within the next block. And I gave an analogy in the video. If you're trying to fly from New York to San Francisco and it's only one plane, you have a lot of people bidding on a few amount of seats. Those seat tickets are going to go through the roof. If there's more planes, then the prices are going to go down. It's the same thing with these layer 2s. So each blockchain has 3 different components, including Bitcoin. You have a consensus layer that says what's true. On Bitcoin, that's proof of work. You have a data layer, which is storage. And that's why you hear about these shards, these parallel blockchains that run alongside of the chain. So you can store the data there and not on the layer 1. And then you have execution, which is your computational finality. Right now, all 3 of those things are happening on Bitcoin's layer 1. Right? And this is why Bitcoin isn't scalable. It can only handle 7 transactions per second. Well, let's talk about what a layer 2 is designed to do. Just like when you go into a bar, you don't swipe your card every time you're trying to pay for something. You swipe your card, you open a tab, you get your drinks, your fries, you buy your buddy drinks, whatever you want to do. And then before you leave at night, you close out your tab and you pay for all those transactions in one swipe. This is exactly what layer 2s are designed to do. And that's why you hear about these roll-up, optimistic and ZK roll-ups. That's essentially what they're doing. They're rolling up the transaction. They're bundling it, just like they did at the bar. They're bundling up the transaction and they compress it to the smallest packet of data possible. Just like when you compress the email file and you send it off, the space is smaller. It's the same thing. They compress it, they send it to the Bitcoin layer 1, and now it's less space that is taken up in the block because that computation is happening on the layer 2. Now, I feel like most of the applications are going to start being built on layer 2s, not just on Bitcoin, but especially on like Ethereum and these other chains. Like that's why you have protocols being built on Arbitrum and Optimism, because they get the security from the Ethereum mainnet, but they're getting the speed from the layer 2. So talk about these 4 narratives. We had a Bitcoin ETF get approved. It's not doing as well as we thought it would do, but it's still the most successful ETF launch in history. You have the Bitcoin halving happening in April. And then you have layer 2s. Stacks is set to benefit from all 3 of those. And I think it can make the price go pretty crazy. And not just crazy, but I think Stacks, since it's built on Bitcoin, I think it'll be an oscillator. Kind of like when Bitcoin goes up, Litecoin and Bitcoin Cash will go up. I think since it's the main layer 2 on Bitcoin, I think it'll go up and it'll offer an opportunity for, normally Bitcoin pumps first. I think Stacks will pump with it. You'll be able to take some profits and start to cycle into other alts that we talk about on the channel or other alts that you have on your radar. So let's talk about the Stacks value proposition. So first off, if you didn't know, Bitcoin is actually the most secure network in the world. And that's part of the reason why its adoption rate and the token price has just exploded over the years. It's been the best performing asset of the past decade. Currently, there's roughly $5 billion in mining equipment working around the clock to ensure the network is secure. But while Bitcoin is a great network to record transactions cheaply and securely, it does come with a glaring problem. Unlike Ethereum, developers can't build dApps or decentralized applications on top of the Bitcoin blockchain because this was called non-Turing complete. Ethereum was the first Turing complete blockchain, and Turing complete comes from Alan Turing. If you haven't seen The Imitation Game, watch the movie. It's a really good movie. It's the story of the computer, and the computer was actually invented to crack the enigma so that we can win World War II. And Turing complete just means it can conduct complicated transactions. It's what makes a computer different from a calculator. So this is why you won't find DeFi, NFTs, or games on the Bitcoin network like you would on Ethereum. This is where Stacks comes in. It provides a solution for those looking to combine the security features of Bitcoin with decentralized applications. So first, it has backing from some of the biggest venture capitalists in the space, including Union Square Venture, Digital Currency Group, and like 20 others. And it works similar to a layer 2 network on Ethereum. Transactions are made on Stacks, and then they're confirmed and posted to the Bitcoin blockchain. And since Stacks is the top layer 2, we think that the crowd is going to like it. You know, they trust the Bitcoin network already, so they'll likely trust Stacks over other smart contract platforms. Stacks is actually one of the few networks that's been seeing established developers, aka those working in crypto for 2 or more years, to migrate to build in the Stacks ecosystem. If we head over to DeFi Llama and we look at Stacks, you can see that they have a TVL of 54.42 million, and look at the recent growth. Yes, because of the Bitcoin ETF, but hey, it's growth nonetheless. You look at the volume, you can see volume's been increasing, but it's lately been flatlining. You look at core developers. Now, this is important because if developers are building, that means there are applications. And if there's applications, that means people can use them. If people are using them, it can generate fees. And, you know, that's a successful business right there. You got core developers up. You have dev commits up as well. Actually at an all-time high right now. Okay, so let's talk about how Stacks works. So basically Stacks achieves Bitcoin level security through its what's called proof of transfer consensus mechanism or protocol. So it's 2 main participants in writing Stacks transactions to the Bitcoin blockchain: Bitcoin miners and stackers. Bitcoin miners who want the chance at earning income can transfer some Bitcoin to the Stacks network in hopes of being selected to become the miner of a Stacks block. Stackers are those who stake STX tokens and prepare transactions for Bitcoin miners. They also verify the state of the Stacks network based on previous transactions posted to the Bitcoin network. Once a Bitcoin miner is selected, the miner sends their Bitcoin to the stackers. In return, the Bitcoin miner receives newly minted STX tokens and transaction fees. Also, looking forward is 2 major upgrades on the horizon for the Stacks network. The first one is the Nakamoto upgrade, and this is projected to release, I think, by the end of April. The second one is the SBTC upgrade, which releases 2 months after Nakamoto. The Nakamoto upgrade will bring faster transactions between Bitcoin blocks, and this is obviously a much needed upgrade with the explosions of users over the past few months on the Stacks network. As the ETF got approved, users often have to wait up to an hour before their transactions is settled on the Stacks network. This isn't sustainable if Stacks is going to become the go-to DeFi network for Bitcoin users and people who are used to having technology at their fingertips working fast. So while these growing pains are frustrating, it's good to see demand to use the network is exploding at least. The next upgrade, as far as the SBTC upgrade, is actually a trustless 2-way Bitcoin peg system. So in other words, Stacks created a way to mint and redeem Bitcoin on the Stacks network without the need for a trusted intermediary. I think this will be big for the Stacks network since it'll unlock $780 billion, like Donald Trump would say, $1 billion in value on the Bitcoin network, allowing it to be used in dApps on the Stacks network. So while Bitcoin on the Bitcoin network is the safest to hold, you can't utilize your Bitcoin in the dApps that allow lending or borrowing. You need smart contracts to carry out these functions. Here's an interesting stat. During the 2021 bull market, nearly $17 billion in wrapped BTC made its way to the Ethereum network to be used in DeFi protocols via yield farming on exchanges, staking, So as you can see, it's already proof that there's a massive demand to use Bitcoin in different dApps. So bridging Bitcoin to Ethereum network comes with risk. Anytime you're bridging, you're going up in the tech stack or going across, it's the chance for vulnerabilities, and that's why you see bridges get hacked all the time. Stacks will eliminate these risks with this new technology, and I'm actually looking forward to this upgrade to happen. I think if we see anything close to the amount of Bitcoin bridge to Ethereum, the new upgrade will be a major success, and I think the price will benefit as a result. So you can obviously use the Stacks token to pay transaction fees on Stacks, or stake it to help secure the network and earn an income. And Stacks is competing directly with Ethereum to become the go-to platform for smart contracts. It's competing with other layer 1 blockchains. So now we're getting into the price prediction. So in order to predict the price of a layer 2, you have to compare it to other layer 2s and layer 1s. I say layer 1s because I feel like, and I already said why, I feel like most of the dApps are going to be built on layer 2s because they're faster. And the layer 2s are still going to get the security benefits of whatever layer 1 that it's on, whether it be Bitcoin or Ethereum. Okay, so let's look at where the layer 1s and layer 2s went in the last bull market. Remember, this was before a Bitcoin ETF. This is before layer 2s had their time in the sun. And this is before a lot of growth has happened. We're going to see institutions get in. So I expect all these numbers to rise, or at least most of them. Some of them won't come back. Polkadot hit 56 billion, Cardano 94 billion, Solana 75, Phantom 8, avax 30, Cosmos 12, Near 12, Ethereum 560 billion, Tezos 7 billion, Matic 19 billion, Scale 1 billion, Loopring 4 billion, Midas 673 million, you had Mantle 1.7 and Immutable at 1.7. All right, so now let's go over the price prediction. We looked at all those market caps. I'm going to give you guys my conservative and my aggressive, and I think it's good to have a conservative estimate, have an aggressive estimate in terms of where you think price will go, and structure your take profit strategy to where even if the conservative isn't reached, or even if it goes past your aggressive prediction, you're still able to make some good money. This is the best way to come up with a take profit strategy. So right now, Stacks' current market cap is $2,117,786,664. I'm estimating that we'll see a $50 billion market cap. That's my conservative estimate. And for an aggressive estimate, I think we'll see a $75 billion market cap. But just because it's attached to Bitcoin, if this was any other layer 2, I think it would be significantly less. But it's the top one on Bitcoin, guys. Bitcoin. So I think the price can do a 23x. Like the 23x is the $50 billion price prediction. That's the conservative one. So right now the price is $1.47. Let's go through the take profit strategy. So if you're starting with a 10K investment, my first take profit isn't going to be until it does a 4x. It'll turn the market cap from 2.1 billion to $8,471,146,656. It'll bring the price to $5.88, and my $10,000 would be worth $40,000. So at that point, I'm taking out 15K, and I'm taking out 15K because I want to take out my principal plus 50%. So now I'm playing with house money. The goal is always to be playing with house money as quick as possible because you never know what can happen. It can get hacked, even though it's on Bitcoin. Like you literally never know. Nothing's guaranteed except death and taxes. So I got 15K in profits, and I still have 25K in Stacks left. My next take profit is going to be when they do a 4x. That's going to bring the price from $5.88 to $23.52. And that's going to bring the market cap from 8.4 billion to 33,884,586,624. My 25K is going to be worth 100K. At that point, I'm taking out half, taking out 50K. So now I got $65,000 in profits, and I still have 50K left in the position. My third take profit, now we're in between my conservative and my aggressive, but I'm playing with house money, so I'm good with it. I'm good. You ain't gonna hear me complaining. My third take profit is gonna be when it does another 2x. That'll bring the price from $23.52 to $47.04. It's gonna bring the market cap from 33.8 billion to 67,769,173,248. My 50K is gonna be worth 100K, and at that point, I'm taking out 75K. As you noticed, the higher we get up, the higher we're getting closer to the top. I can't time the top. I'm not going to try to fool myself to think I can. I did that shit the last bull market, and I'm not as wealthy as I should be as a result, but I'm not going to make that mistake again. And I want you guys to learn from my mistakes and not have to do it. If you try to time the top, you will be disappointed. All right? There's no such thing as taking too many profits. Don't rely on your emotions except for when you're coming up with your take profit strategy, because like when you're coming up, if you want to take profits once price is doing a 4x or a 3x, that's when you use your emotions. Like what resonates with you? What says, okay, I can wait for a 5x, or maybe I just want to do a 2x. Like you listen to your gut when you're doing that, not once prices are going up in your positions, because you'll most likely lose. All right, or not make as much money as you should, or get lucky and think you can do it again and then lose in the future. Either way, don't do it. Make a plan and stick to it. I didn't try to rhyme there. So now you have $140,000 in profits, and I just showed you how to turn 15K into 165K. The 165K is 140 plus 25K. So now you're probably wondering, what do I do with the 25K that I still have left in the position? What I'm going to do is every time price increases 10%, because we're going into that aggressive, I'm taking 50% in profits. And I'm going to be looking at my chart, looking for key support and resistance levels so that, if it starts to get below key levels, I'm just going to sell everything. And guys, if we look at the stacks chart, you can see it pumped with the Bitcoin ETF. It hit this resistance, which is a pretty key level, but it's been holding here pretty strong for a few weeks. Now, we might come back down a little bit. If Bitcoin corrects, I definitely expect this to correct, but Bitcoin's been holding pretty steady as well. If you look at this, once it gets past $3.22, it's in no man's land. There are no key support and resistance levels, and it looks like, or it doesn't look like, this is just trending upward. You got a low here and a higher low. You got a high here and a higher high. That is the definition of an uptrend, and I think we'll see stacks pump hard this bull market as it's able to take advantage of 3 different narratives. Guys, if you like this kind of content, visit the website. It's in the description. Know It Outside XYZ. If you want to learn how to conduct the fundamental analysis and technical analysis that you see me do on this channel, as well as be able to generate passive income on your favorite strategies. I made a video on how you can yield farm with stacks using the Alex Lab exchange, which is the top DEX on stacks. Definitely give that video a watch if you haven't. But you get access to our course that teaches you all these things, and you get access to our elite coaches. You get access to live calls with us. We'll give you our buy and sell calls, our yield farming strategies. We'll take questions. And if you just want to be a part of an elite community who, to be honest, just wants more out of life, who's passionate about blockchain technology, and we all just want to build each other up, click the link in the description, book a free strategy session, talk to us. We'll see if it's a good fit for you. And if not, we'll still answer your questions and try to help you to the best of our ability. But with that, I'd like to conclude this video. I hope you got value from it. If you did, I ask that you consider subscribing, drop a like, drop a comment. Let me know what protocol or project you want me to cover next. But with that, I thank you so much for watching. I love every single one of you, and I'll see you in the next video. Take care and trade safe.